my eye. What's up? How's it going, guys? Man, I got a lot to talk about today. All right, let's see if this can get this working and not. Oh, don't pull me out. Okay. Give myself more slack. All right. What's up? Thanks for joining, especially joining early. Welcome to the stream. I've been consistently inconsistent, but this is a lot has happened this week, and we need to talk about it. Of course, the moves kind of started happening on Black Friday, or well, in the market you would call it Black Friday. So last week, big moves. Everything is going pretty much risk off right now. And what that means is all the risk assets are basically going down. So, a lot to talk about here. If you are just joining, make sure that if you're just joining, you're probably people that already follow me and I consider to be good friends. So, ask your questions. Want to talk about the stuff we've been doing this week. I got a list of things to talk about, things that I've done, but I want to know what you guys have traded, see if I can help you out. I think a lot of people are, whenever this thing happens, this thing comes around, these corrections and stuff like that, people get a little nervous, rightfully so. But you got to think about it in context. As you know, what is really happening here? Okay, the fact that we have from the high down to here, about a 5% correction, and that is noteworthy, just tells you how bullish we've been all year long. And how many times have we been here? How many times have we been here where everyone's talking about Fed tapering, everyone's talking about interest rates, everyone is thinking, well, the crash is coming. I know in October, I batted off a couple of people that had these really, really smart experts that were saying that, the crash is coming because people were superstitious about October. And, well, new all-time high that month. So once again, we've entered a pullback. So what does that mean? So bear market, exactly. By the way, if you're on the YouTube, I think I posted also the Trading View stream. It's much better quality. I'm watching both. I take it by the fact that I've got comments that yes, the sound is good. People can hear me. If someone's on YouTube and wants to check that as well, let me know, because that gets recorded and stored in perpetuity. But honestly, Trading View is so much better. I love Trading View. I hope some of you took advantage of their Black Friday deal to sign up for an account and have the alerts, because this morning there was a trade in Ethereum that popped up, posted on Discord. Let's bring up Ethereum. Where are you? There you go. Love it. Every day does not have a trade, period. In fact, last week, I didn't take a single trade at all. This week, I took a few. And that's the way good trading is. You have to go when there's opportunity. You can't just go when there's a feeling. I had someone send me a message on Discord, another member that I've talked to for a long time, Mr. Lucas. I don't know if he's watching now, but he was asking me about PayPal, thoughts on it. And he asked me, well, if you had to pick a direction, long or short, what would you do right now? I wouldn't. I'm going to wait for some kind of alert, some kind of setup, and then I'm going to go. If I don't get that, I'm not going to touch it. And that's the case for anything. And every once in a while, you get something like this morning. And that's one thing I want to talk about in the live stream today. Since I don't do like explanation videos anymore, I might clip this out. But for the few people that are actually following how I trade, you have to make your own trading system. But this has been so good for me. That's why I share it to people. And it's really simple. Looking for price volatility spikes. They're really easy to identify. That's why I code an indicator to find them. That's why I set up alerts in TradingView and on Thinkorswim to tell me when they happen. Because these price swings, when the market tries to swing something bullish, especially when it happens at a resistance or support, a bunch of people in here we're trying to go long. Like if we look at this I'm just going to jump right into it because these happen, and to me, I went to the Van Gogh immersive experience yesterday, and really interesting, tortured, artistic person. Not saying that you know I'm an artist or anything, but I see the beauty in every once in a while having a setup that fits all the technical analysis rules. Every once in a while somebody comes and says, like, I don't believe in technical analysis. It's just astrology for men is the meme. Okay. I can sit back with some quiet confidence and say, you're right. Probably more than 50% of the time, the technical setups don't work. But when they do, they present high reward, low risk opportunities. I have too many ears. I only have two. What do you mean? Oh, bingo. Yeah, I get it. I got you. I'm slow. I'm slow on the draw on that. So going back to this, let's just see what happened and what happened with these spikes. Okay. So this is this morning. There was a jobs report in the market that everyone in the stock market was related to. And actually, I mentioned this in Shahar's Discord, kind of as a joke. I mostly talk about, or it should be 50% of the time I talk about crypto, 50% I talk about stocks. And a lot of people that are in crypto right now, they just have nothing to do with boomer stocks. I mean, that's for old people, right? That's for retirees and people that are uh, I don't know, not young and smart and clever as the crypto enthusiasts are. But let me ask you something. Let me challenge you a little bit. Why did excuse me? Let's bring it up. These are S&P futures, S&P index futures. This is the market as a whole, the S&P 500 futures. Why at 8:30 when the jobs report came out, you had this big price spike in the S&P 500, the Nasdaq. Why did you have that at 8:30? And then simultaneously, right at 8:30, you also had a similar spike in crypto. Are they correlated? Should they be? No. It's crypto, bro. It has nothing to do with stocks. Oh, price action and studies don't work. Macroeconomic trends, they don't matter. What the Fed is printing can only make Bitcoin and cryptocurrency go up. I don't need to look at stocks. I don't need to care about the broader market. I don't need to broaden my horizons and have a well-rounded, diversified knowledge and understanding of markets. I'm just going to focus on crypto. Well, then why does something like this happen? I don't have a concrete answer for you except to say that crypto, like stocks, are risk assets. And you have sentiments of risk on, risk off. When people are feeling like taking risk, they invest in more speculative things. When people are feeling more risk averse, they invest in safer things. And look, with the volatility and the history of sick gains from crypto, it's a speculative risk asset class. It just is. You may think it's the future of money, but it may be both. It could be both. It could be both the future, but it still is a risk asset and it behaves like one. And so when this jobs report came out, which is tied to people's expectations of Fed tapering the money printing rate, interest rates, you have this big correlated spike in all risk assets followed by a massive sell off in everything. And I noticed this about 2 years ago, um, as I've been trading crypto for many, many years. And it saddened me a little bit. Not to have emotions in trading, but I thought that crypto would be a diversification from other real estate classes. I think you should see crypto as a separate asset class that you should be invested in. Just like you should have stocks, you should have bonds, you should have cash, U.S. dollar. I know trash. If you think that cash is trash, fill it up in a bag, bring it to my house. I'll take care of it for you. Okay. And real estate and crypto, I mean, these are all things that if you're building wealth you should have in your portfolio at reasonable to you proportions. You shouldn't be 100% in thing or another. Ask the people that are 100% real estate what kind of trouble they got into back in '08. Asking people what kind of trouble they got in. Well, stocks too. So it's part of a diversified portfolio, but unfortunately, it is correlated. And so you can't escape the correlation. So that is the observation that I want to share with people that are completely dismissive of stocks and just want to be in crypto. Don't do that. Don't think that you're smarter than the generations that have come before you. I think that's a big mistake. I was listening to somebody today, or excuse me, a few days ago, and they were a little bit younger, and just the amount of arrogance they had for how everyone was an idiot, but they were really smart for being in crypto. I mean, yeah, you have to have a high degree of intelligence to understand it. There's a lot of stuff that he probably understands that I don't. He may have more IQ than me. He may be smarter. But when you go around thinking that you've become smarter than everybody else, I think that's a big mistake. I think there's people that can make gorgeous carpentry work that I could never do, that may not have even finished, they didn't go to college, they may not have finished high school, but they are master craftsmen, and they've trained their brain to do things that you cannot do. So don't ever think that you're just generally better than other people because you know this one thing that's been working for you. So, man, that's getting a little bit eccentric. Let's talk about technicals. So, when you have these spikes form, and this is what I want to look for, you have a price action that shoots up very quickly. Think about the people that are bullish in this situation. They're going long. They're buying into it. They're trying to capture that big rise. They're super bullish. Let's take this away right here. Let's not see what happened. Let's just look at this and just take in the chart going up and think about what a trader is thinking and feeling when they buy the breakout. Let's just say that they do buy this breakout. It's going up, bro. It's going up. It's going to the moon. We're going to break that all-time high finally that we've been failing to do for weeks now. And let's just say that we're being very, very. So let's just say we want to take a trade up to the high up here. Okay, on this action. Oh, did we lose our place in time? Oh well, we'll fix it. So that would give a nice, let's say 4-1 on there. Come on, TradingView, don't let me down. There we go. Okay. Let's say that we took a trade something like this. Okay. We're taking a okay. We're taking a trade and we're going long. And then given a little bit of time, boom. Well, maybe we hold on to it. Maybe we're still bullish. Maybe we didn't get stopped out, but we're definitely not as excited to see a big red bar as we would be to see a big big green bar. And so what ends up happening is people start to get nervous. They start to get nervous. Some people get out of their position. Some people have their stops down there. And eventually what you end up having, there's a lot of indecision here. Matt, if you've been trading long enough, you've been in this situation. You had a little bit of profit to start with, but it's not quite playing out the way you wanted it to. Okay, you got some hope. You got your stop right below this low right here. You're still holding on hope. It still can go. We'll see what happens. Now it breaks you out and then it goes. Things decline a lot faster than they go up typically. In crypto, it's different, just like it is in other kinds of stocks that move very quickly. But generally speaking, corrections happen much quicker. As you see bullish trends, they sort of kind of do a little step up thing. People buy a little bit, buy a little bit more, buy a little. Buying an asset is typically a well thought out, structured, planned decision. Getting out of something because it's a knee jerk reaction. And that's why these things move so quickly. And so, what I'm trying to identify when I look for these kind of spikes is a candle. And this is what makes it so easily identified in an indicator form. A candlestick, it opens. Basically, we'll do a little bit of 101 here. So, the open of the bar and the close of the bar are going to be represented by the filled in part of the candle. And so if we have a red bar right here, that means it opened at this point and closed down here. Red means it closed lower. The wicks, the long lines that we see, represent the high and the low within that time period of the candlestick. Okay, so at some point, price traded all the way up here. That's what got everybody in long. But by the end of the 30-minute period, by the end of 8:30, 9 a.m., it closed to make a bearish bar that also closed below this red line right here. I call it the median line. From Ichimoku, it's the Tenkan-sen. That's just basically just the line in the sand that I watch to see where did this bar close? Is it bullish or bearish? It's 50%. So theoretically, less than half of the people are still holding on to it that bought it during the bar. There's your story for it. And when you see something like this, you got to think about the people that bought in this breakout that are now sitting in a negative position. They've either gotten stopped out or they're really worried about getting stopped out. And so this is what, if you're a smart trader, you want to capture. You want to capture people in their worst moment. That's where the big money is for you. I know it's brutal. I know it's harsh, but that's where the money is forced liquidations. When people are getting forced out of positions, that's the best time to buy or sell. Think about oil earlier this year. Was it this year? Yeah. Oil went below zero, the futures did. What kind of obvious trade is that? But, it's because people were being forced out of the position because somebody trading in their apartment or their mom's basement a single share of a oil futures contract does not have the capacity to go pick up the barrel that they just agreed to buy according to their brokerage obligations. So what do they got to do? They got to sell it at any price they can to get rid of it before the expiration. They're forced out. People that can take delivery, man, what a great opportunity that is to get oil for less than free, get paid to take oil. So what you're trying to get with these spikes, what I tried to identify, and this comes from pain. It comes from trading a long time and losing money myself on these kind of patterns. I started to think, what if I can make money on them? And so when you have a situation like this is telling you something. This is telling you that everyone got roped into this bullish and now it's not going that way. It just so happened to happen at where I like to see it, a 50% retracement, which I drew right here, which is very simple. Just you take the move, the down move that you had from the last high back on the 1st of December and draw it out. And you can see pretty clearly, boom to boom, there's a level there. So you see it at the level. You see some little, hey, come look at me, get an alert in TradingView or Thinkorswim, or however you have to set the alert. And then you come look at it and you take the trade. Where? Well, there's another awesome level. Here's a spike to the upside that happened on the 28th of November that started this move. So not only that, but if you draw from this trend, where's a good target? Boom. We know that our stop is right above here because if it goes above this spike, more people are buying. You're wrong. You get out of the trade unless you define your risk. So you take it at the open of that bar. You know where your stop needs to be. It can be tight, 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 tight right there. And then your target can either be these lows or, as I was looking for, right here. This level right here, which is the 50% of this move, you see how I already have like a red line right here? That's actually the May all-time high. It was actually another all-time high on the 21st of October. And then today, it became a significant level. Well, in the past, it did. So it makes for a good target. Now, if you were trying to buy off that target, I wouldn't have anything against you. I wouldn't fault you. But just like all trading, sometimes you take losses if you would have gone long. But it presents itself for a good target to take some profit. And if you want to hold on another position, to keep it short. So hasn't happened. I've been short for a while now. But this was another opportunity, a very short-term 30-minute opportunity that I had today. Posted on the Discord. And so, yeah, I love it when these things happen because they're really infrequent. But to me, when everything kind of sets up, it's a work of art. So now we should have some people joined in. Yeah. So thank you for joining. Let me plug. I do run a Discord where I post all these things. not to make money, not to charge you for it, just to have a social community of people to join. The link should be in one of these descriptions or my signature. Join us and come talk, like, share, subscribe. Really just to get more people that are interested in this kind of thing. I want to talk to people online that are real traders, to keep me sharp. I don't want to just sit around and not be educated by other people. There's a lot about crypto that I do not know that's going completely past me that I'm trying to catch up on. So, um, yeah, I like to hear other people's opinions. So join up. Also, if you're in the chat, in as we get into it, if you have a symbol that you're trading, you want me to look at, I'll look at anything. But be warned, I'm going to be honest with my opinion, and you may not like it. You may not like my opinion about something, but then again, it's just my opinion. You can make a lot of money off of it. Don't take my trading advice. I'm not a financial advisor, etc. TM. So, all right, comments. What do I think about the metaverse? Good question, Josh. Oh man, good question, man. I'm usually pretty. I'm generally dismissive of all the new stuff that the Zoomers are into, but not this. And the metaverse, as I understand it, is basically, sand and mana. I mean, you notice I even talked about it last week. I added these two to the bottom of my watch list. What do I think about their price action? Scary to me. I'd rather see a pullback. But what about their use case? I do want to talk about that. It's been a lot. Like, there's a lot of these coins and tokens that I got this. I got added to this spam thing on Twitter just a few minutes ago, when I was posting everything. Where the blurb was, 98.7% lockup of all the tokens for 78 years. What's this supposed to mean to me? I think from context, it means that there's low liquidity. In other words, people can't sell, and that's supposed to make it go up. I mean, stop with these speculative games. I mean, stop. I mean, yeah. I mean, look, I'm pretty comfortable managing what I have, and I like to trade. I don't need to go drop money into this looking for 100, 200% return. So I'm not interested in just the price action of these things, but I would be interested in a use case. And the metaverse, even though it's kind of a meme, is interesting to me. A little bit of backstory. I'm not talking about myself too much, but since in 2005, a friend of mine was discovered this little hack inside of a game called EverQuest, and I made a website for him to help him sell some of this duplicated in-game money. If you play RuneScape, you're probably aware of how prolific the connection between real life economy and RuneScape money is. World of Warcraft has a money system. Every single online game has some kind of a tie to the larger financial sphere. It's labor. People work in the game. People spend hours in the game, and people that don't spend those hours are willing to pay something of value, either U.S. dollars or the in-game currency, for other people's labor. That's what wealth basically is people's labor, is what you're buying. And so it doesn't surprise me at all, the rise of NFTs, but less surprising is the idea that there's going to be this virtual in-game world where we're role-playing virtual characters and avatars, and that there will be a financial system in it. I've been talking to a good friend of mine about how excited he is, because he is a in-game builder. He loves to get in games. Uh, let's just say Minecraft is, but beyond that, things like games like Conan Exiles, recently Satisfactory, EverQuest Next, RIP. But where you build great structures in these sandbox games, and yeah, people value that stuff because you can experience it, you can walk around in it, you can show it off to your in-game friends. Second Life is a game many years ago where there were articles that would come out talking about, like, oh, can you believe this person sold their house in Second Life for $100,000? Yes, I can believe that. And so in this metaverse, now I don't know if sand and mana are going to be the final iterations of the in-game money. In fact, honestly, Jen, you shared to me like a screen cap of what you were doing, and it just didn't look fun. I mean, what is it? These are little icons on the screen telling you how much money this thing has. Now, if and when you have a 3D world that you walk around in and you build things and you have a functioning economy. The reason I got into trading was because of World of Warcraft. I watched the auction house in World of Warcraft back around the Burning Crusade area. I remember I started on a new server. I went and mined up a bunch of copper nodes, and I put them on the auction house one day, and they sold for like maybe like 60 silver. And then the next day, I farmed a little bit more, put on, and they were selling for a gold a stack. I was like, whoa! Like if I just waited, the price went up. What if I bought some for 60 and then sold it later? Oh, gold is 100 silver, by the way. What if I bought it for 60 and then sold it for 100 the next day? I started to notice the movement of price, and I was just hooked. That's when I began to study price action. And this was back in 2005, I'd say. Yeah. So good 15, 16 years, I've been fascinated by the movement of price. And that's what I've dedicated the last years to studying. So yeah, the idea of in-game currency selling for real stuff, totally unsurprising. I can totally get behind it. Don't know if these are going to be it, but I'm watching. I am 100% watching. I'm not invested in these, by the way. Disclaimer, because from a price action perspective, no, I'm not going to touch this yet. But if and when there are games that are actually built on these platforms, I'm going to go be a billionaire in these games. Promise you that. I've been training my whole life for this. So that's what I think about the metaverse. So yes, bots do always kill the in-game currency. There's a tremendous amount of mudflation. Mud is the old term for multiplayer online, or excuse me, multiplayer underground dungeon, whatever it was back in like the BBS boards before my time. We used to dial into these things. But for instance, recently WoW Classic came out. It's a game where in the game you have these items that have a fixed rate of production. They have a fixed drop rate called Black Lotuses. They only spawn like once an hour in the world, and they're very competitive. Well, as the game began printing more money, what do the value of these fixed value? What do the value of these fixed production rate things do? They go up. Knowing this going into the game, where did I put all of my worthless fiat money? Into a supply limited asset. And what did it do? It was an investment. So even though you'll have bots and things like that, that's the game. Play it. It's just that simple. Like figure out what the game is, and I say game broadly. The same goes with crypto. Same goes with the real world. Figure out what the game is and play it. I mean, take your losses, take your wins. It's just that simple. I mean, you can sit around like, ooh, moan about bots and stuff, or you can just find the edge. Find the edge. Let's see what's going on over here. Atom superiority. I don't know what atom superiority. Tell me what atom superiority is. Victoria VR. I like the Unreal Engine. Now you're talking my language. A lot of games are on the Unreal. The game I've been playing recently is on Satisfactory is on the Unreal Engine. Crashes a lot, but oh well, it works. Thoughts on XPEV and NIO? Actually, let's look at Spell first, and we'll get to those. So Spell USD. Is this what we're talking about? Okay. So usually when people present me with things, I'm very happy to see something like this, because usually when they present me with something, it's something that's gone on like a parabolic rise, and they're asking me, should I buy it? I'm gonna guess, and this is just me entirely speculating for you, Lion, that no, actually, I'm not gonna assume. I'll give you my unabashed opinion, then I want you to tell me. So, believe it or not, I like this. I like this because it's not a parabolic. So what did it do from the first? I don't know how far back the history goes. This is just on the FTX exchange that I just pulled up really quick. But you did have a 100% gain, which in the crypto world is healthy. And now from the initial coin price, you're down 38%. Something like this is like, believe it or not, this does not attract me. because you've already had a big rise. You got to wait for a pullback. And you can get a pullback on some of these because I actually talked about this with a friend of mine. Both sand and from here to here, again, what do I love? I love the 50% pullbacks. And if you were looking at it from the original run like this, I mean, you could look at this and say like, before it happened, like, oh no, I've missed it. Woe is me. I've missed a 300% run. Whatever shall I do? Let me buy it now. Or you could be smart and you could wait for it to pull back, and then you could still capture that. And that happened sometime mid-November. Good stuff. Good stuff. Same thing with Mana. I'm pretty sure that from the launch point to there, a little more dicey. Maybe you got stopped out, but you still got a pullback. So if I'm looking at Spell, and now if you'll put in the comments so I haven't been tainted, what your current perspective, what your perspective is, what your position is, and tell me what it is. That this thing has not gone on a huge rise yet. If there's a use case, if there's hype around it, because let's face it, that's what drives crypto now is hype. I think this is a good potential because you have the opportunity for that big move to happen. You could still have it happen. So, yeah, thank you for presenting this because usually people ask me about something after it's already gone up 1,000% and asking me if it's a buy. I mean, I get that question so much, I get tired of it. Still answer it though, same way. It's your money, but something like this that no one's looking at probably because it's not up 1,000%. This is interesting. It's the whole contrary of what most people want to look at. All right, so XPEV and Neo. Man, Neo used to be the favorite. Xpeng, is this a Chinese company? If so, I already don't like it. The Chinese stock market is so manipulated by the People's Bank of China that I don't have any Chinese exposure. I just don't. Um, and it's they not only manipulate individual stocks as the Communist Party dictates, but they manipulate their entire market. It's a very American centric sentiment, but I don't think it's unfounded to stay away from Chinese companies. I mean, it's not a capitalist economy. It's not. They pretend like they are when it suits them, but at the end of the day, you have this big external risk, like they have done with. Was it what was the Chinese company? Well, Alibaba. You know, they got blocked on their thing. Jack Ma had to go into hiding because he said some unfavorable things to about the party. There's just this huge risk in there that you have extra to the risk of everything else. Yeah, maybe you can get some good returns off that risk, but I'm just not that interested in Chinese companies. So I don't know if that's what it is, but it looks like a Chinese company to me. Um, it's down a lot, but technically speaking, at a first glance, I see that you're basically kind of playing around with this 45 level right here. Looks like it's going to close the day here. It's kind of dangerous. You're just not, you just didn't go any higher here. If I was taking a trade off this level, I would have stopped out and looked for another opportunity. Honestly, it's just not going, and you got to cut your risk on this one, I think. So, Neo, I know it was a favorite back during the whole craze, but man, again, this is one of the things that I really try to emphasize to people. This particular price action right here. We're gonna go back in history here. I'm gonna get to what it's doing now, but a lot of things do this. A lot of things make an all-time high on a big bullish run, and then they make an attempt at that high, like it did here. And actually, what was this, February? Yeah, I could go back and look through my postings and stuff like that. But that was a short I had in here because of this. Um, Probably, if I'm don't hold me on this. You can go back and look at my posting history. But this right here, let's see, did it make a 30-minute spike? I'm not sure what it would have been, but this right here is a big warning sign. When you have an all-time high and then a failure to get to that high and break it, that's bearish. Maybe it goes up some of the time, but very often something like this happens. In fact, I was talking about this today. I actually had to make a new emoji on Discord because I had to make a sad Elon face because one of the biggest bulls on Tesla shaved off some of their winnings. Not faulting them, not hating it, but again, Tesla doing the same thing. Doing the same thing. Tried to make a new high, did not. Could still go up, could still be the future of driving and AI, but for right now, price action is eh. So same thing. And then you also had another attempt at it right here. And when this happens, if you're even if you're buying the story, you got to pay attention. And you just got to cut your losses when it breaks that region right there. You just got to. I mean, these narratives, I think, let people hold on to things, which is good for long-term investments, but they're bad for people that just they just ignore what price is telling them and oftentimes do an even worse thing, which is double down because they believe in it so much. Don't When people add to a loser, I ask them, why do you want to be more wrong? The market's telling you you're wrong if it's in a negative position. It's just that simple. So, but tell that to the people that bought Tesla back in 2018 when it was going bankrupt. They can take that mark of pride that they held the course and were those outliers that actually it worked for them. For right now, what is Neo doing? Pretty simply, it's holding a very clear support. It's banging up against it. As long as it holds here, if you're going to hold, if you if you're going to hold, you hold here. But if it breaks below it, get out. Don't look back. I mean, we talked about Zillow last week and how I took a position on it when it pulled back to the 50%, like I like to do, of this level here. It created a region in here of price action with the setup. And so I was holding until it broke this level right here. And so I got out. I actually had a fundamental bullish view on Zillow because I use their platform. I think their platform is great. Their website's great. I use it for my rental houses. People, it's great. But they were trying this whole strategy of house buying, and they've had to write down a quarter to a third of $1 billion in losses. And so, but I didn't know that when I was buying it here, and I didn't know it when I was exercising good risk management and getting out of it here. But if I had held on to my narrative that I liked the company for whatever reason, I'd be down another 41%. I can think of these examples because they happen more often than not. And if you cut the loss and move on to something else, you only need a few big winners. You don't need to have this be the winner. You just got to think like that. Let's see. What is Gala? Gala, is this a stock or is it okay? It must be a crypto. Um, hmm, okay. I wouldn't hate somebody if they wanted to try to take a position here. I wouldn't hate you. Not my cup of tea, though. I like to see a lot of price action behind it to draw from. Just not much to go on. It's basically just a hype coin. So as long as you have a good team of Twitters and a really good poppin' Discord to pump it, go nuts. POWR. Is this a stock or is it the stock we're talking about? Oof. I mean, if it's the stock you're talking about, maybe it'll pop for you. I mean, there's nothing here that really tells me to buy it. If you think it's a deal, yeah, it's one of those things. Um, is it lagging on TradingView now, or is it just on YouTube? Remember, it was lagging on. I think YouTube. Yeah, YouTube is giving me an error, and I see the little thing going. How about TradingView? Is TradingView going, or is it? So it may be me. Ah, dang it! Come on, TradingView. I had such high hopes for you. Okay. I don't know much what I can do differently because TradingView's typically been pretty good. So, yeah. All right. We just have to carry on. You got kicked off of the stream? Okay. We'll see if we can give it a second here to unbuffer. I'm going to take a drink. We'll take a quick break. Be right back. Testing 1 2 3. Testing 1 2 3. I'm testing. I'm talking while I read this thing on YouTube about keyframes. Yeah, this thing typically starts about halfway through the stream. I'm not sure. Yeah, it showed that stream health is excellent at 4, and then at 4:39, just 5 minutes ago, it stopped. I wonder if it's a time of day here where I'm at. Hmm. Let's do a little test here. I think I'll do what I'll do for next week. Oh yeah, that's a high ping. Okay. All right. Well, I can't change anything now without breaking the stream, so we'll have to hopefully get through the rest of it. Let's see. Promise we'll make it better next week. We talked about the spikes. Let me get in a few things that I wanted to get in today. Okay. All right. Is it getting any better? Are we any better? Let me know. Let me know. Let me know. Thanks, Sarah. Yeah. If only the popularity. Yeah. Yeah. There's a big lag on YouTube actually because I'm looking at the screen right now and I'm still away from my chair. Yeah, they're trying to silence me. Tell them not to buy the POWR. So let's take a look. Let me just go ahead and put in. Yeah, that's unfortunate that the stream happened. Well, I'm gonna try something different next week. I'm gonna try a different. My backup ISP might actually be even better than I have as my failover because it never let me down when I have it. I'm on Comcast right now, which actually I must admit that I closed out of, which may or may not work because it stopped me out here. This is one of those things where you get stopped out on a trade and it goes back around. Oh well, still need to mitigate the risk. Another one that we closed out, Delta, hasn't really recovered. I really want to own these companies, but for short-term trades, I just can't justify holding on to them. You tell me, Jen, how's it doing now in real time? It's 4:47 my time. Is it still lagging? Maybe. This is the second time at the same time of day this has happened. Okay. think everybody's getting home on a Friday, and who knows? Okay. Well, the one thing that I did, let's just finish wrap up what I wanted to talk about this week. The pick, I guess if you could call it, the trade this week is ExxonMobil. On the day December 2nd, which was Thursday, it was yesterday, pretty much all of the uh, oil related companies, Marathon, ExxonMobil, ConocoPhillips, they all did this spike. Okay, but the reason I liked ExxonMobil was because it just so happened at a 50% level. So that fits my rule set for when I'm going to take a trade. It lets me pick which one I want to trade. Let's relate this back to crypto and today's trade as well. So should have done it when I had the good quality, but both Ethereum, just clean that off. Both Ethereum and Bitcoin did the thing today at the same time. But if you look at the price action of Bitcoin, especially in the last couple of days, you didn't have as clearly a defined little sub trend sell off at the 50%. So if I'm trying to pick the best to play a correlated signal, because oftentimes these spikes, these signals happen together from correlated pairs. I mean, markets, instruments move in tandem with each other. We all know this. So the question is, when you have a bunch of these to choose from in a single moment, which one do you pick? And then you can use, like I did, the rule of looking for the best 50% level, the best support or resistance to play it off of. But sometimes it comes down to intuition. But yes, it can be drawn by a line here. Okay, Gucci now, excellent. I don't think I have Charter in Atlanta. I think they got bought out or sold out or something many years ago. I had it when I first moved to Atlanta, actually. No, 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 no. I had it in Athens. Um, I don't think they have it here. Comcast is a monopoly. Only thing I would choose from, unfortunately, is Comcast and AT&T, and AT&T is my failover, and all they have is DSL. Ugh. Let's see. Honestly, yeah. Oh, Jen, you got the premium service. You finally listened. Good for you. Good for you. All right, cool. Let's see what else. So there's that. I wanted to kind of show that there's usually when you're looking for a setup, it doesn't have to be a spike setup. It, you're going to see a correlation happening in all of these, all the pairs that you're looking at, and so you want to uh, pick the best trade opportunity you can. All right. So also, I was noticing this week, and I think everyone should pay notice to it too. Obviously, it's no surprise to anyone that the market has been going down since Black Friday, and a lot of people are starting to get worried. And I talked about this in another Discord. I'm not worried about it, and I could be wrong because sell-offs and corrections, they tend to have a similar characteristic in that they're real sell-offs, real corrections, real crashes are all unmitigated disasters. They're panic frenzies of selling. And this is just me doing this for years and years. What you have here is a rhythmic sort of selling. It comes to a resistance, sells off, gets bought up, sells off. It makes lower lows, makes lower highs, but you don't see just this massive panic. What do I mean by panic? I mean something like COVID, where get my cursor, where you either have a gap followed by just absolute red days with nobody buying anything, or you have again sustained selling, and they happen out of the blue. They happen for sometimes no particular reason. COVID just happened to have a reason, and you really can't prepare for them. You really don't see them coming, and so that's why I don't worry so much. I don't worry. I worry about what things I can control. I'm a very low anxiety person about things like this. I worry about other things. But as far as a market correction happening right now, again, what are we seeing right here now? I mean, I made a post about this uh, a few days ago, I noticed it a little bit late, there was a spike on the daily of SPY, again, volatility spike. What we had here was there's my trend line. You basically created an all-time high. People bought it up, and it closed below the red line. Boom. So what would I be looking for if this was any other trade? And you can even look at markets in this way. You can look at SPY, you can look at the NASDAQ, you can look at everything. I still rely on the same technical setups because ultimately they're modeling people's emotions, no matter what the instrument. A bunch of people bought it, sold off. What are people doing? Not being calm. So from a trading perspective, I'm still looking at this to maybe come down a little bit further. I'm going to incorporate Ichimoku, as I like to do in this one. And what it's basically doing is it's trying to pull back to the cloud once again. And where's that cloud? Well, of course, because clouds are based, Ichimoku is based on 50%. We've, boom, hit up against the 50% of the October through November move. And today we held it. There's a timing aspect in here in that probably we may see it come and actually try to really test the cloud. Okay. We also got momentum on the bearish side of price right here. But I'm altogether not worried. Where we would need to go to get me worried about a correction is a lot further. We really need to come down into this region here, the 430, 440 range, get price and the momentum clear. You know, back in October, price got below it, but momentum never endangered it. It's a very simple Ichimoku technique to use to gauge price sentiment. So it hasn't violated all year. Not saying that it can't, but just watch for it. And don't panic and rebalance your portfolio because some guru told you to. Why is it stuck on post? Is the market closed? Yes. Well, the market's closed because it's past 4 p.m. That's why it's the market close live stream. I do it at the end of the close. That way the bar's closed and we can talk about it. So is that what you're asking about? Why is it post? I'm not sure what you're asking there. Okay. What else is going on? So oil stocks, kind of the big thing for this week. Of course, they did sell off. And now these is an example of where you do have price on the bearish side of things. Okay. Maybe that means that XOM is not going to work out. We'll see. Still a trading setup I want to take. But oil as a whole, it is following that Ichimoku route to get out. But then again, is everything in trading 100%? No. I think the broader term picture of oil, well, look what it did. It actually did a pullback to the cloud here. It's a big pullback. I know that Manaconda in the chat was watching it around here for it to come down and retest. So good trade there on the short side there. It seems like the big players are selling on up moves. That's kind of what the intuition you can. It's good that you observe that. It is because, like I said, it's rhythmic selling. There's some structure to it. Maybe people are doing it for tax advantages as we get close to the end of the year. You know, trying to sell some losers, close some weak positions, harvest losses. So maybe they're doing a little bit earlier than December. You know, I've been talking all year. If this is a normal year, you'll get a Santa Claus rally. Don't count it out. Don't count it out just yet. Don't count out a new all-time high before the end of the year. Just don't do it until price tells you otherwise. Another thing that I've been talking about on TradingView, got some flack for, is Shiba Inu. I posted this on social media too. This was an ad right here where still short from when I posted it last week. Because what it did was you had a failure. Let's just take you can see it on Ichimoku because that's the 50%, but just to clean it up a little bit, you have this 50% move of the big move, and then when it breaks it, you can oftentimes go short, boom, comes up to there, and that's where we're looking on that. It's getting listed by Kraken hype rally. And then again this morning on this just broader market wide buy and then sell up, it actually before the market about 7 a.m. touched another level, the more recent Kraken move up. Again, so you had this Kraken move where I call it the Kraken move because everyone was talking about, oh, it got listed. This means it's going to go to the moon. It comes up to here, bangs up against your 50% retracement level, gets below it. Get out. Get out. Stop. Stop it. Stop. I'm going to be a millionaire if I just hold on, don't listen to anybody. No, just fine. Do all you. But look at what price actions tell you. Get out, look for another opportunity, and then when it pulls back to that level that it broke, boom, make your money back if you lost it by going short. Remove the biases. Remove the sentiments and biases that this dog money is going to make you buy you a Lamborghini. I don't know what you're trying to do with this. I mean, what do you really? Dog money. Yes, I can talk about the VIX. That's actually one of my favorite topics is to talk about the VIX with Ichimoku. Let's do it. I was actually going to look at the VIX. I think that's also Happy Cloud's one of her favorite topics to talk about is the VIX. In fact, if you were here at the beginning of the stream, that's actually the little thing where I had it play through. So very interesting VIX price action. When it first came to these levels right here that it set in May and October, I noted that this was okay. This could have been a good opportunity to try to long the market because you're coming up to resistance in VIX. But as you see, a lot more fear coming into the market. Let's put on Ichimoku here. Now, when I'm looking at Ichimoku on the VIX, it really, I don't dig down that deep into it. Okay, I think YouTube's actually starting to catch up a little bit. So what I want to look for is a little bit more of a higher time frame because that's where you're going to see these levels. Let's talk about like the theory behind the VIX. First of all, the VIX, for those that don't know, is the volatility index. It measures the implied volatility of the next 30 days of SPY, SP 500 ETF options. And what this tells you is what the market is pricing in. Are they pricing in more volatility or less? If the VIX is up, that means that implied, what people think the volatility is increasing. In other words, when the VIX goes up, people think that the market is going to move a lot quicker than it has been moving. And typically what happens is the VIX will stay at a very low level this year, 15, 16, when the market's just creeping up slowly, because that's not very volatile. There's not much volatility. See? But when you have down moves, you have deviations from the trend, the mean, now you're getting volatility. And so that's when people will start to buy protection. They buy more options. They drive option prices up, which drives implied volatility up, which drives the VIX, and that's the measurement. Volatility is a mean reverting. It has a mean reverting aspect. In other words, it will tend to revert to its middle ground. And so what ends up happening, let's clean up some of these other indicators right here. So one thing that I use, let's clean up here. I use these things I have right here, retracement levels. It's not fancy. I don't sell it for money. It's basically the distillation of Ichimoku. It's basically showing me 50% retracement levels as price goes along for a longer period, 200 bars. And this is derived from Ichimoku. And what you'll see oftentimes with Ichimoku, because it draws to 50% levels, is you will see the Senku B, the big yellow line, the top of the cloud, the thick line of the cloud, basically, the one that stays really flat for a long time, the 52 period, goes flat. About the same place that you'll see this, because what it's doing is it's measuring out be back here, it's measuring out the 50% level, which I talk about a lot, of that recent volatility spike. And so what you can oftentimes do is you can time and look for these market events to happen at these key levels on the VIX. Doesn't happen every day. And it can happen oftentimes on lower time frames as well. But you got to look for these to happen because on May the 13th, let's see if we can bring it up here. Yeah, because I made this comparison before. Just use pure price action. So where is our May the 13th? Right. So when you see the S&P 5, excuse me, the VIX hit these, come here, give me that time. Okay, it's not one to behave. But when you have the VIX make a move and hit one of these levels, it can be an Ichimoku level, it can be a broader 50% level, that in itself can oftentimes be a timing element on a market drop for when it's going to turn around and go the other way. Happens a lot. You got to watch it. If you're trading the S&P, if you're trading the futures, if you're trading SPY options, you need to watch the VIX. In fact, if you're trading SPY options, you definitely need to watch the VIX because it's measuring the pricing of those options. If the VIX is high, then you're paying a lot for those options. That means if VIX comes down, the value in options, regardless of what price does, is going to come down as well. You really, really want to stay away from buying options when you're in a high IV environment, and VIX is going to tell you that. So let's take a look. So if you look that period from the beginning of January, let's just say the beginning of the year, we had a price sell off towards the end of January, February. No. Yes. Memory. If that was when we had the meme stocks, if you guys recall, that's when we had the GMEs. Do you remember the GMEs? The AMCs. And when these stocks went crazy, all the other stocks crashed and the market was thrown into chaos because, oh no, what if, retail traders are going to destroy the market as we know it? That's the fear that came in. And so this January movement, that thing that happened in the first quarter, dictated, and you can see it with the Ichimoku line here, what happened in February and March would then happen in May, and then later, October, again, it was that level was the bottom of October. And now, I know with hindsight, we've broken it. And to be honest, we've closed above it. If I was being objective about the VIX, more volatility is coming. Yeah. Because what it's telling you here by closing above that level, just like it did back in the COVID crash, go back and let's look at it. I remember when we had COVID happen and I saw this, and this was before I really started getting public about things because, was it? Yeah. When we closed above this level right here, and then this is going up to the monthly, again, price can spike up. It's interesting. Back in 2015, if you look at it, you had it hold. Isn't this interesting? The monthly, the weekly, the daily, even lower. How the VIX likes to hold these 50% levels. And that's why I like your question about Ichimoku, because Ichimoku is based on 50%, so it can help you see it. So you had that happen, and then you had this level here back in COVID time. Boom, closed above it. That means that volatility was sustained past that resistance level. Yeah, it can spike up on these instances, but you always had to kind of maintain that level. But that close above it was basically your warning that that volatility was going to continue for at least another few months. Actually, yeah. So that's the monthly, and then that level. Well, here again is the weekly. So you had the VIX closed above that level in the last week of February. You had another down move and another down move, another down. I'm talking about the SPY. As volatility increased, you had all these weeks of rising volatility to warn you that this thing was not over. And then when you did finally get another close to the other side, which happened about April, it's a little late, But around the time of the end of March, you could say that it was over. COVID was over. Remember? Well, at least people's panic was. I remember going to the grocery store and having oatmeal again. That was my indicator that things were going back to normal. So, an objective reading of the VIX right now is that we have actually gotten past the year's VIX line in the sand. So, that being said, I got to admit, next week we could see more volatility. And I'd honestly trust the VIX to tell me more about what the market is going to do than the SPY itself. So while it's holding the level I like to see here, yeah, the VIX is telling us something different. The VIX is telling us there's more to come. It's going to be an objective. Could be wrong. There's a little bit of conflict, but that's what the VIX is saying. We'll see which one's right. We'll see if the price level of the SPY. This is an interesting experiment. And I want everybody to watch this. This is going to be a good educational experience to carry you forward through all your trading. Is the price action, is the support on SPY more important than the VIX? Which one is telling us the truth? It's going to be interesting to see. Let's see. Let's wrap things up. I think that's a really good note to end on going into next week. So, any final questions? Let's read the comments and stuff. UVIX, if I believe that is going to be a leveraged derivative product. What is UVI? Oh, UVXY. Yeah, so I sigh because I know this is what people like to trade. Okay, the reason I think people like to trade this is because this is a share that you can put in like a 401k or an IRA to trade the VIX, trade volatility. I'm cool with that. But you got to remember that UVXY is a derivative. I mean, you can trade it, you can express your sentiment that volatility is going to expand on this, but it's a leveraged product. The reason people use it is because if you have a move in the VIX as we did, then you're going to have an outsized. Let's just say that from the 24th of November, if you've gone long the UVXY, it is up 52%, whereas the VIX from the 24th of November, is up. Well, it's up 63%. I don't really see the advantage because if you just look at the price chart, I guess maybe because you can't trade VIX directly in accounts, but you can do options on VIX. But that gets above my pay grade. Studying volatility on volatility, oof. I just like pure price action. The reason I don't like it is because if you get into a position, you see that as a leveraged product. See, I got to even adjust this. As a leveraged product, that means that the down moves on VIX are going to non-proportionally affected on the downside as opposed to the upside. You're going to get more bang for your buck on the upside. But as you can see, when the VIX goes down, the UVX goes down more. So you have an asymmetric risk profile to the downside here. So I just don't like it, but especially for studying it, this is the tail of the dog. You want to look at the dog. If the dog is wagging its tail, then you know something. So this right here is, I just would not recommend watching this primarily because it's going to be influenced by the VIX. So that's what you need to be watching. This you can trade. You can express your opinion on the VIX with this as an instrument, but it as a thing to study and look at every day, not nearly as important, I think, as the VIX itself. That's what you need to watch. And if you think about it, the VIX is a derivative of the SPY options volatility, and that volatility is a derivative of the options. The options are a derivative of the SPY. The SPY is a derivative of the S&P 500, and the S&P 500 is a derivative of all the markets. So it's the UVXY is a derivative to like the sixth power. So that's what you're basically watching. So, but yeah, if you want to trade it, by all means, it's a good way to express a trade. Yeah. All right, let's revisit this next Friday. Thanks for joining. Thanks for being patient. We're going to see what is next Friday. Yeah, the 10th. I can do it. I can do it. I can be consistently consistent. See you guys next week.